QuickBooks Pro Plus Desktop 2022 Pay Employees. Get ready because we bookkeeping pros are moving up the hilltop with QuickBooks Pro Plus Desktop 2022. Here we are in our Get Great Guitars practice file, going through the setup process with the View dropdown, the Open Windows list on the left-hand side, Company dropdown, Home Page in the middle, maximizing that home page to the gray area. Reports dropdown, Company and Financial, taking a look at that balance sheet standard. Customizing the reports with a range change from 010122 to 123122. Fonts and numbers, changing that font to 14, okay, yes please, and okay. Let's do the same for the profit and loss with the reports, Company and Financial, P&L, range change 010122 123122. Customizing that report with the fonts and the numbers, changing the font to the number 14, okay, yes please, okay. One more time with the reports drop down, accounting and taxes with the trial balance this time, the trusty TB, range change 010122 123122. Customizing that report, fonts and the numbers, changing that font to the number of 14. Okay, yes please, and okay. We're now going to go through the process of processing payroll, imagining that we're generating the payroll checks. Noting that to do that, you have to have payroll turn on within QuickBooks if you're going to be doing it within QuickBooks. Noting that that's going to be an add-on type of feature. It could have different levels and tiers in terms of the cost of it, depending on the level of support that QuickBooks would be providing. We here, however, are going to use the manual version, which is a free version, which is great for practice, possibly even better than, the actual version, because you actually have to manually type in the calculations, getting a better understanding of what is going on. However, it's not something you'd want to use in practice, the manual version that is, because in practice, any one calculation of payroll is pretty easy, pretty straightforward. But the fact that we have so many different calculations in payroll makes it more confusing, meaning any one tax calculation for an employee, not too difficult, but when you add them in aggregate together, and add into other benefits with them, it starts to get difficult. When you add multiple employees, it starts to get difficult. When you have to add them together and calculate this stuff on an employee by employee basis, as well as an aggregate basis, and on a year-to-date basis, as well as a check-by-check basis, then it starts to get difficult just due to the fact that you have a lot of different transactions going on basically at the same time. Therefore, it's nice to have support by either the software to double-check your numbers, and or your other option being to not do it through QuickBooks if you're going to be paying more for it anyways, and then thinking of your option of doing it through QuickBooks or paying more to like a third party like an ADP or a Paychex to be able to calculate it. Now note that the payroll is a process where a lot of people are involved in like the human resources, and they're involved in many different areas, and a lot of times people don't understand the transaction behind payroll because again, there's a lot going on with it. Even people that work in payroll and human resources are spending all their time just trying to comply with laws so they don't get sued, and not spending all their time kind of thinking about what the transaction is with regards to just the accounting transaction, which is what we will want to focus in on here. So whether the payroll is in-house within QuickBooks or done outside by an ADP or Paychex, it's a good idea to know what the payroll process is, because it will often be a cause of concern if there's something wrong, because it can be somewhat complex and a lot of people don't quite understand what it should look like. If you do, you can tie out the quarterlies to your financial statements, whether they're done internally or externally. You can tie out the W-3s and the W-2s to your financial statements, which could be a good value added. Note to turn it on, you can go to the Edit dropdown. We go to the Preferences on down below. We're in the Payroll and Employees Company Preferences. We turned on the Manual Payroll, and so we're going to close that out. That's the free one. And then we're going to go to the home area. We set up our payroll to be processed on a monthly basis. So typically you could pay the payroll, you could pay it, weekly, you could pay it bi-weekly, semi-monthly, monthly, and so on. Once it's set up, then you're going to be processing the payroll here whenever the payroll period is going by to process the check. So we're going to imagine that that's at the end of the month here. It's going to set up, I'm going to close the caret on the left-hand side. It's going to set up our payroll. I'm going to change the dates up top because I'm kind of working in the future, and hopefully it'll let me do this as of 01/30/22 as of the end of the first month that we're working in, 01/30/22. Note that I have two dates up top. I've got the pay period ending, and then I've got the check date. Those don't necessarily need to be the same date. You might put some distance between the two so that you have a distance between the pay period ending and you processing the checks. That was more and more important when you were like actually physically handing out the checks. If the checks are going to be done electronically, maybe it's not quite as important to have a difference between those dates, but you could, right? You could say, well, I'm going to be ending this on the end of the week, if depending on how often you pay them, and then I'm going to issue the checks, 3 days later or something like that if you so choose. It's going to come out of the major checking account. Also note that you might set up another checking account, many people do, for a payroll account, so that what they're going to do, and you might say, well, how is that going to work? Because I'm not going to have any money in it. What you'll actually do is transfer money into the payroll account just to process the payroll, just enough to process the payroll, and then it goes back out of the payroll account. Why would you do that? Because then you have one account that just has the payroll checks being quite complex. And so it's not, and when you're going to get like sued or something like it, the prospect of getting sued is highest from your employees, unfortunately, generally. So it'd be nice if you had all the checks that are related to the payroll checks kind of in one account. And that also gives you another internal control to calculate what the amount that you need is, and then take that amount back out. But we're just going to take it out of the checking account. Then we have the print checks on the check stock, or you can handwrite and assign the check numbers. So if you're going to print the checks, then same kind of process. If you're printing checks elsewhere, you'd have the actual physical checks. You're going to put them into the printer, or you can handwrite them, or you possibly might indicate here if you're going to do some kind of electronic transfer and you're using this then to process the checks to show that, in which case you wouldn't have, in essence, a check number related to them. So I'm going to keep that, and now we can take a look at the actual employees. I'm going to check off the 2 employees, and if they were good to go, we could just say continue. They're not good to go here because, in part, we don't have the paid payroll. We have to actually manually input some of the data into the system to calculate the payroll, which is kind of good for practice. So I'm going to go into the atom here, and we've got the calculation of the salary that's populated automatically based on the information we put into the system. And so that's good. Then down here, we've got the salary, and then we've got the withholdings, which are not calculating automatically. So let's pull out the trusty calculator, and I'm just going to calculate some basic kind of withholdings. Now, the federal income tax, the federal withholding, this is something that we would be dependent on the W-4 to calculate. And this is the main one where it's really nice to have the software help you to calculate it, because it's not a nice flat tax. It's a progressive tax that we have to use tables for, which are based on the W-4, which is going to be based on, the marital status and whatever other added exemptions and so on that they told us to put on place for it. So I'm just going to put in a number for that one. I'm going to just say it's 720. I'm just making that number up. The other one here is going to be Social Security. Now, this one is more of a flat tax. It's not completely flat. By flat tax, I mean pretty easy to calculate, because I could just take the salary, 4583.33, times the rate, which is 0.062. That rate could change over time, but it's usually a fairly flat rate. Now, it's not perfectly flat because there's a cap on it, and if they go over the cap, then it's still got its complexities, but it's nowhere near as complex as the progressive tax related to the federal withholdings. Note that the federal income tax withholdings, by the way, is the one that you can see on you're going to imagine it go to your employees on the W-2 form. That's the one they're going to use to fill out their 1040, and it washes out at that point in time, because if they over withheld, they're going to get a refund. That's what we try to shoot for, kind of, generally. And if they under withheld, then they owe taxes when they file their tax return at the end. The Social Security, then, we shouldn't have any, hopefully, reconciliation problems, because it's a flat tax and it should calculate basically exactly, unless there's some funny circumstances going on. So I'm going to say that's 284.17 about. And then the Medicare, similar situation. It's kind of a flatter type of tax. That's going to be 4583.33 times 0.0145. Unless they, it's a flatter tax, 6.45. Now, again, they could, let's go 6.46. They could change that one, but again, a lot easier to calculate. So these two, you can see on a person by person, still fairly easy to calculate, but there's traps even with those, because if one employee hits the cap, then the thing gets messed up, and you got to know when they hit the cap. You got to know it by paycheck, by employee, as well as the aggregate. Gets confusing. So those are going to be the things that we're going to deduct on the federal side. So that means that the salary that they would have gotten, $4,583.33, we're going to keep from them on their behalf. These are things that we're required to do. It's involuntary. It's not like they have a choice. They have to pay these taxes. And it's involuntary for us. We're required to withhold them. That's going to be the $720, in this case, of the federal withholding, Social Security, and Medicare, which we're taking from them and paying to the government on their behalf in theory. Now, you could have other things that would be voluntary withholdings, things that they actually want us to withhold, and that would be things like benefits, 401k plan, health insurance, and that kind of stuff. And of course, we could have state taxes too. Those will vary from state to state depending on the state regulations. Then on the employer side, we're also going to have our tax that we have to pay over and above. These are the taxes that are not coming out of the employee paychecks. They're taxes that we're paying on the employee's wages. Meaning, it's kind of funny because usually you pay an income tax on the money that you earned, and then you get a deduction for the money that you spend. We're actually spending the money to the employees that are earning it, and then we owe taxes on the money that was the income to the employee. But in any case, it's a matching tax. It's going to be over here. It's going to be the 284.17 for the Social Security, and then the Medicare is going to be then the 6.46. And there's also a federal unemployment tax, which is usually a lot smaller, so I won't get into it right now. And it also has a low cap in relation to it as well. So it'll phase out like over time. So in any case, I won't get into that now. That's the general idea of it. We do have a payroll course if you want to get into payroll basically in more detail, but that's the general idea. Let's go save and next, and let's take a look at the next one. Save it and next. And now we've got the hourly rate. So we're going to say 40 for hours here. That results in a calculation of wait, I got a whole month here, not 40. Let's just say it's 160. So I'm going to say 160 hours. And so then we've got our hourly amount then is going to be the 2,400. We have to calculate then the withholdings on that. Again, I'm going to make up the federal withholdings that are basically we would be getting from the W-4 type of information. And then the Social Security and Medicare, the flatter type taxes, we can typically get an idea of that, which is going to be then the 2,400 times 0.062. That's going to be the 148.80 about. So 148.8. And then we have the Medicare 1,400 times 0.0145. And that then giving us the 3480 about, so 34.8. So there we have that. And then our matching side of things over here that we would have to pay to 148.8, Medicare 34.8. So there we have that. So that means that then they earn 2,400. They're going to get this withheld 1,856.40, and then our side of the taxes will be over here. So if you look at this, we can think about this in aggregate and by an employee basis as to what we expect to happen on the financial statements. So what do we expect on the financial statements? We expect then the expense account to go up by the amount of the earnings, which is going to be the amount of the 2,400 for this employee. And then we're going to have the checking account go down, but the checking account's only going to go down by the 1,856.40, the amount that we're actually going to pay to the employee. The difference is going to increase some kind of liability account. This 360, the 148.80, and the 34.80, it might be in one account, just called payroll liability, or it might be in multiple accounts that are broken out between FITs, federal income tax, Social Security, and Medicare, which we're then going to have to pay because in theory, we kept this money. It's kind of like we gave the employee 2,400 and then they gave us back this money right here so that we can pay it to the IRS on their behalf. That's kind of the idea of it. So now we got to pay that to the IRS. And then we also have these items which could result in a payroll tax expense of these two added together because these are our taxes over and above these taxes for the employee on this one employee. And then we're going to have to increase the payroll liability because we haven't yet paid these taxes either. So that's going to be the general idea. We could think about that on an employee by employee basis. We can also think about it in aggregate, meaning if I was to add the two employees up for their gross wages, their total withholdings for federal income tax, Social Security, and Medicare, I could think about that same journal entry basically in aggregate. However, we have the necessity of us to report this to the employees on an employee basis, on a basis of check by check, and then also on a year-to-date basis. And so we're also going to have to track a year-to-date basis to make sure that if any caps are going to be hit, like Social Security and Medicare and so on, because that changes the taxes as well as the federal unemployment tax. So it gets a bit more complex. In any case, let's go ahead and continue it and say, let's see if we can post this thing out and then check it out. So I'm going to say, let's do it. Let's create the paychecks. Print the paychecks. Let's go ahead and print the paychecks. And we're going to say, okay. No printer. They won't let me print, so print the paycheck stubs. Let's preview the stubs. That's what I wanted to do. Okay, so here we go. So now this is what a familiar kind of thing that you might see on the paycheck stubs. So we've got the salary. Notice that we have the current items and then we have the year-to-date items. That adds a level of complexity by employee, this being Adam Hamilton. We've got the information of the salary minus the withholdings, federal withholdings, Social Security, and Medicare, getting down to the net check. And the same for the employee of the second employee here as well, which was Erica. Erica Smith, same kind of thing. Let's close this out, and then close this out, and close this out. And then we can check it out. First, I'm going to look at the check register just to see that they are actual check kind of things, decreases to the checking account by going to the lists drop-down chart of accounts. And we're going to go into the checking account, just double click on it. So now we've got these two checks that were made on down below. They're special checks indicated by the pay check, but they're just in essence normal checks, but they give that special indication. If I go into them on the bottom, I don't have the expenses and items, but rather this information that's kind of the detail. If I want to look at the paycheck detail, there's the paycheck detail. You can't really change these paychecks very easily, so you want to be very careful about changing a payroll check, but you could like void it and reissue it would typically be the way to go if you need to change it. I'm going to close this stuff back out, and then we're going to go to the trial balance. What's going to be the impact on the trustee TB? We know the checking account's going to go down. Double clicking on it, we got it going down by our two paychecks here. If we went on and notice they also are indicated as a check, but they give that special indication that we process these checks through payroll. So then if I close this back out, the other side's going to go to the expense account, payroll expense. They grouped them both together in there. Note that we have the detail in here. We've got the two employees. There's only two paychecks that have been processed, and they have the gross pay here for the two employees, and then they've got the taxes. These are our taxes, not the employee taxes. In other words, this 4583, if I double click on it for Adam, the 4583 is not the amount that they got, it's the total earnings right there. It's the total earnings. And then if I close this back out, these two amounts, the 284.17 and the 646, are our payroll taxes. In other words, if I go back on this, you get to the same check. But if I go to the check detail, we're looking at these two amounts, our side, not the employee side, but our side. Closing this back out, closing this back out. So by default, the QuickBooks groups together the wages and the taxes in the same area. Many times people break that out, the wages and then the taxes. If you're trying to reconcile this to your 941s at the end of the quarter, or your end of the years, your 940, all the 941s and the W-2s and W-3s, then it can be useful to break these out into two categories, or just to basically recognize when you're trying to reconcile them that this amount right here does include the taxes on the expense side of the employees that the employee paid. It's included in their earnings, because really to us, they are not our taxes. They're the employee taxes, even though we're the collection person. All we are in that transaction is the IRS is forcing us to be their tax collector. We are their tax collector. So they earned $4,583, And in theory, we took $4,583 from them, which we're going to be paying to the taxes. We're not going to record that separately as taxes because they're not our taxes, they're earnings of the employee. These two amounts are our taxes. These are our taxes that we had to pay over and above the earnings of the employees. So those are the ones that would be the employer taxes, possibly then be broken out, if you so choose, into another account. If you wanted to break them out into another account, you can look at the item lists and see how you're going to be setting up your inventory item lists, and then you're looking at the payroll items. So then you could basically look at these item lists and determine, say, the employer taxes. You might go into the employer taxes. Here's the employee Medicare and the company Medicare. If I go into the company Medicare and say next, for example, and it's going into the payroll liabilities, this payroll expense right there, you could set that up to another account, calling it payroll taxes expense instead. But I won't get into that. By default, they'll just dump it all into the payroll expense. Let's go back on over to the trial balance. So those are going to be those two. And then we've got the liabilities that are going to be set up for the payroll liabilities. Here they are. They just dumped them all into one category. We could break them out again by changing those payroll items. But we've got the liabilities here, which are going to represent both the employee liabilities, the ones that we took from the employee, didn't pay to them, but withheld them, that we're going to have to pay to the government on their behalf, and our payroll liabilities, which we incurred by paying our employees, because we have to pay some kind of like income tax for the earnings of the employees for some reason. So we're going to have to pay that as well, and that's going to give us our total liabilities here. If we go back to the home page, then that means the next step is going to be, after we process the payroll at some point, to pay the liabilities, decreasing the liabilities back down. If you take a look at the balance sheet, you could see these items here, same kind of thing. We looked at the checking account, we looked at the payroll liabilities, which are going to be down here, and then on the income statement, we saw that we had the payroll expenses now appearing down in the expenses, which we could break out into payroll expenses, and payroll taxes would be the normal kind of breakout. You can further break out payroll into like other categories like salaried payroll, executive payroll, or by location, or whatever you want to do there by changing the payroll items. So let's go back to the trial balance. This is where we stand at this point in time. You could check your numbers here. If they check out, great. If not, try changing the date range and see if it's a date issue. We will be running the transaction detail at the end of the section, so you could check it there too. And hopefully we will be making backups. So hopefully if you want to rework something, we could get those backups working so you can rework the problem if you want to do that as well.